All right, well, welcome back today. My name is John Mazzara with Remax Results. Today I have a couple of special guests, and I really want you to listen to them because they have some fantastic mortgage products to share. It's Josh Schoenly and Jordan Syers with Nexa Mortgage. They've been around for a long time, great reputation, and they have a presentation on FHA mortgages that they're going to walk through today. And I'm going to let them take over and tell us all about themselves and their company, and then I'm going to have them go through their presentation. So Josh or Jordan, whomever would like to start.
Right on, John. Thank you. Thank you. I appreciate you having us on here and excited to share what we're calling 5 little known facts about FHA mortgage financing. Um, just very briefly about me, I've been in the real estate industry since the mid 2000s. Got my mortgage license a little over 2 years ago to expand my ability to help more of my own clients in our local real estate practice in central Pennsylvania, but also to help other agents throughout the country that I have grown relationships with and even built organizations with and around. And I was lucky enough to partner up with Jordan about a year and a half ago. And his level of expertise and knowledge when it comes to guidelines and creatively putting together financing options for clients has just continued to blow me away. So he and I are going to kind of tag team the presentation a little bit. But Jordan, if before we get into the 5 little known facts, maybe introduce yourself as well.
Yeah, my name is Jordan Syers. I'm a branch manager at Nexa Mortgage. Been in mortgage lending for about 11 years, right under 11 years. My license for the last 10 years.
If you can't tell, he's got started in middle school.
Yeah, I did. The day I turned 18, I actually got a job at a mortgage company. So I started off very early, but I've ran. I think when we originally met, I was a director, Josh, for Nexa. But I've ran branches, ran teams. I was a director for Nexa, one of 5 directors at one point. I developed their Nexa's training platform where we had about 500 LOs and 22 instructors working for me at one point. So I think it's very important for loan officers to know their products. And I think FHA is one of those products that people don't deep dive enough in to know how they can help clients. And that's kind of why we're here today. So we're here to deep dive on this product to find out what you can and cannot do and what the limitations are for FHA home loans, where a lot of banks will have overlays, right? Where us as brokers, we work with a lot of banks that don't have overlays. So it gives us just more opportunity for home ownership at the end of the day.
And we'll give examples of what that whole overlay concept, what that means and why that's relevant to you as a borrower if you're shopping for a mortgage or for financing options to purchase your first or next home of any kind. So little known fact number 1 is credit score requirements for FHA, which, Jordan, are what?
So there's 2 buckets that you fit into on FHA. The traditional bucket, which most banks fall under, is between 580 and as high as it will go. Which is 3.5% down. Yeah, 850, which is 3.5% down. Below 580, where most banks won't go, which this is where that overlay comes in, where it's basically a bank saying FHA allows it, but we don't allow it. Right? We work with banks that do allow it, that will go less than 580. They'll go down to a 500 credit score with 10% down. So between 579 and 500, if you have 10% to put down, you can absolutely get a home loan. I've done many home loans in between this. I would say in the last, I don't know, 2 to 3 months, Josh, we probably closed 4 or 5 at this point. Last 2 to 3 alone. So the biggest challenge is coming up with 10%, but it is doable, extremely doable.
On the subject of overlays, there are even at the 580 point, there are many lenders, and in fact, you may be listening to this, and you may have been told that for FHA you have to have a 600 plus, or 620 plus, or a 640 plus. So even at the 3.5% down, you may have had an experience where you've been told that you don't or wouldn't qualify or wouldn't fit in the box, even though you are above that 580, we have many lenders that will do 580 plus 3.5% down, and we'd love to explore that if or when the time is appropriate. And a little off topic, but as it relates to credit score, if you qualify for VA, the credit score is irrelevant or theoretically irrelevant, and we can explore that with you if interested as well. Idea or little known fact number 2 is the concept of multiple FHA loans or mortgages. How does that work, Jordan?
I would say the best way to describe this is I think there's a misconception in the industry that you can't have more than one FHA home loan or more than one VA home loan, or because the product only allows for primary residence. It is true you can't buy them as investment properties, but you can have multiple FHA loans if you're trying to buy another primary residence. So moving one house to another, for example. Now, it has to fall into certain categories or certain exceptions to get you where you're, to be able to do it, essentially. I'll give you an example. I've had where, depends on what state you're in, but there's states where you might buy a house with your mom or a brother or a sister or whoever. If one person is staying in the house and another person's exiting and wanting to buy a home, that's an example that you would fall under an exception allowed for another FHA, home loan, because one of the borrowers that qualified is still staying in the property. Another is increasing family size. That's probably the most common. I did a home loan for a friend of mine that got turned down by 2 other banks because they said they couldn't have more than two FHA home loans. His wife was currently pregnant. They had a 3-bedroom house. They already had 2 kids. They needed an extra bedroom. It's not real hard to prove, that his wife was pregnant. So a doctor from their maternity doctor or whatever, a letter. But that's all I had to provide was a letter from their doctor confirming his wife was pregnant. And then they were allowed to buy a house down the street that had more bedrooms. That would be an example. There's other examples that are not as favorable, like divorces and other things that you could potentially have a multiple FHA home loan situation. Or you can co-sign. Let's say you're a parent and you have an FHA home loan and you want to help your kid buy an FHA home loan. That's completely fine. You can co-sign on as many FHA home loans as you want. I have a client that has 8, for example. He co-signed for all of his brothers and sisters to buy a home loan. So, a lot of real estate agents and mortgage lender will, have a misconception of this, and they'll automatically just say no instead of asking questions to see if you fall under these exceptions. Last one is job change. If it's over 100 miles away, you're changing jobs, you moving state to state, completely fine. Right.
This can be a great strategy to build an investment portfolio, right? You could kind of layer this on with one of our other little known facts, but you can use this as a strategy to strategically. Yeah, exactly. So, well, number 1, we got credit score. Number 2, multiple FHA loans is absolutely a possibility. Number 3, using an FHA loan so that you could purchase a multifamily property with low or even potentially with down payment assistance, no down payment. So Jordan, talk about that a little bit.
So multifamily, but just in general, low down in general, it's going to be most common with FHA home loans. So we, in particular, have 36 different DPA programs. Not necessarily something that we're going to, put offer every single 36, because everyone has a pro and a con. But FHA is the most common when it comes to offering grants and national grants and down payment assistance program that can be used to buy multifamily units, a 4-plex, duplex, triplex, or buying a single family residence. And then there's also I don't know if it's on our next slide, but the $100 down and
Yes,
it's on our next slide.
you're
Yeah,
foreshadowing.
yeah,
Yeah.
foreshadowing on the next slide, but essentially it's there's another down payment when you're buying HUD homes for $100, $100 down, right? A HUD foreclosure, if you wanted to go buy a HUD foreclosure, they're kind of hard to find. But essentially, if you found one that's being sold by HUD, which is FHA, HUD and FHA are one and the same, you could do $100 down. It's a product that's out there. It's no different than a regular 3.5% down product. The only difference is the seller is FHA themselves, that they foreclosed on it. So on and so forth. So I know I kind of combined those together, but
Yeah. Well, I just want to double down on this one here. The simple fact or idea is it may be a great idea to purchase your first property that is a duplex or a triplex or a quadplex, live in one of the units, rent out the others, and then when it's time, you found a partner, you're ready to start a family, whatever the case may be, you can use a legitimate exception to then potentially buy your next home with an FHA mortgage as well. Keep that existing multifamily as an investment property and use the cash flow of that to help offset the mortgage of the new home. You could even start with a triplex or a quadplex, then buy a duplex that has a few more bedrooms than the unit that you were in the triplex or quadplex. And then another 12 to 24 months later, you trade up into your own single family home. Jordan, it looked like you were going to.
Yeah, I did this. Specifically, I did this when I was 20 years old. I bought my first property, bought a multi-unit property, rented out the other sides. And we can use the income to qualify for income. We can use 75% of the rents to qualify for, to help you qualify for the property. But I moved into one side for a year, and then I built a home. And I moved in, and then we got married, and had children, had more children, and we moved into it and bought another FHA home. After a year there, I went and bought a conventional home. So I ended up with 3 properties with low money down, probably four units total. First one was 3 units.
Yeah.
So
let's face
that would
it,
be
real estate
example. And
is-
I offset all my payments. So with the rents on the other's house, all my payments were offset. And I think I ended up paying a little bit over like $500 a month for my existing mortgage or something like that. But it's doable with a little bit management. You have to do a little bit of management, but it is definitely doable.
Absolutely. Absolutely. Number five, what about doing renovations or rehabs with FHA financing?
A little story about me. So when I entered the industry, I had a mentor. My mentor was an underwriter for 20 years. Okay, so she made me read the FHA handbook, where I'd say most loan originators are not trained that way. They're mostly trained on the sales side. So she sat me down and said, "Hey, here's these 1,500 pages of handbooks, and this is what we want to do. I need you to read these 3 or 4 times." So I did that, and then I asked her what was the hardest product we could possibly do as a loan originator, not for a client necessarily, but as a loan originator, and that was renovation loans. And I specialized in that in my first probably 4 or 5 years of my career. Did them in and out, backwards and forwards, you name it. They are a difficult product, but not for the reason that the loan's difficult, is that rounding up the contractors are difficult. So not to delve too much into that and contractors and how they're not great with paperwork, but essentially the product themselves is, let's say you have a property that had some wear and tear on it, doesn't quite qualify. Maybe it's been sitting on the market for a little bit. You're needing you're wanting to purchase it for a home for yourself because you can get a good deal on it, you name it. There are renovation loans out there to help you with that. It will essentially give you the money. A contractor will come in, bid out the property. They'll give you the money that you need to purchase and renovate this loan at the same time. Okay. Usually this is cosmetic stuff. It's nothing that's big. We kind of categorize them in 2 categories when we're doing renovation and rehab loans. It's a limited 2 or 3K and then a full-blown 2 or 3K. A limited 2 or 3K is going to be less than $30,000. Okay, so this is just putting makeup,
Cosmetics.
cosmetic stuff. It's like flooring, repairing drywall, you name it, painting, making it look better, but remodeling cosmetically. We're not taking down and adding a structure. Let me put it that way. Then
Or
you're
or
not,
yeah, or adding a bedroom
yeah,
or
adding a bedroom or whatever,
yeah.
which is doable, but it's a full blown 2 or 3K. Okay. Anytime you're messing with structure or you're more than $30,000 worth of work, full blown, it's a full blown 2 or 3K. And it also has to appraise out. So when we're appraising this and we're taking this property and we're saying, okay, property's worth this much. Okay. We get a bid. The appraiser is going to get the bid. He's going to receive it. And he's going to look at it and say, okay, if we do all these things to this property, this house is going to be worth this much. And as long as it appraises out, you'll be able to do those things. So, it's a longer process, but if it's a great area and you like the house and you like the location and it just needs a little makeup, it's definitely something you could do.
And it might be a competitive advantage for you in what is currently still a very low inventory market. In other words, you may not be able to find something that is, you know,
Ready to move in. Yeah, ready
yeah,
to move in.
that is Pinterest ready, and just turnkey that fits your wants and needs. But maybe there are some properties or there's inventory that is a diamond in the rough, and by you being willing and able to take a longer view to it and have a little bit of patience, you could end up with something that better fits your need and not have to compete against 5, 8, 10 other borrowers for what is very minimal inventory on those Pinterest ready turnkey properties. So to summarize, credit score requirements for FHA. FHA is just such a wonderful product, but it's one of many, many, many that we offer. And in fact, one of the advantages, just to emphasize again, is that we work with over 200 wholesale lenders, actually close to 250 wholesale lenders, which means we have lots of products, programs, and options for folks. But FHA as a product category is just a wonderful product for many, many potential home buyers. Credit score requirements, 500 to 580, minimum 10% down. 580 plus, 3.5% down. Number two, you can have multiple FHA loans. There has to be a legitimate exception, and you have to have been in the existing home for at least 12 months. Number three, low down payment to purchase a multifamily. If you have aspirations of being a real estate investor, this is a wonderful way to start. You can learn how to, you can learn how to, own a property and also learn how to be your own hands-on landlord and get started on your path to creating some wealth within real estate. And then when you combine that with number two, if you're ready after a year or 2 or 3 years to then use another FHA loan product to move up into a single family property that better fits your need, you certainly can do that. Number four, they are few and far between, but there are some 100 down HUD homes and down payment assistance. So the HUD homes is one thing, right? And that's limited to the inventory, but down payment assistance can be used in virtually every situation and scenario, or many situations and scenarios with FHA financing. You can get up to 5%. So 3.5% down plus a 5% DPA. Not only are you covering your down payment, but some of your closing costs potentially as well. There are pros and cons to that, as with any of this. And then lastly, renovations and rehabs. And the two big buckets are the limited or the cosmetic, and then the full overhaul. So for those of you interested, if you have questions, if you would like to explore, if you'd like to see what options, products, programs, or what down payment assistance offerings might be a good fit for you, we encourage you to reach out to either of us, or just get back to John and he'll get you in touch with us, and we can see what would make the most sense for you and the best path to making your dreams of home ownership a reality.
That's wonderful. I have a couple of questions.
Yeah, absolutely.
So if somebody out there has a high interest rate mortgage with FHA, they can do a streamline. And could you explain what a streamline would be, and also maybe a chapter 13 if they're active in that, and how that they could, still buy a home potentially using an FHA loan under that circumstance as well.
Yeah. Let's start with you know, the chapter 13. Let's just start with that one first. So on a chapter 13, if you're in the middle of a chapter 13 bankruptcy, as long as you have the trustee's approval, okay, and 12 months of most repayment payments on time, you could qualify while even in the bankruptcy. It's actually easier to qualify someone while they're in the bankruptcy than outside of the bankruptcy. Just I don't know, our systems, we run a system called automated underwriting. It's basically a system that says yes or no, right, when we were running it. And that system has a hard time gauging between file date and discharge date for whatever reason. They think you're just starting if you discharge. So it's easier once you get through the first year, 2 years while in the bankruptcy than waiting. But as long as you have trustees approval and you made your last 12 months payment on time, you could qualify for an FHA home loan again. So where chapter 7, just as a bonus here, I'm going to give you a little bonus on it. Chapter 7 is 2 years from discharge date. It's the lowest amount of time on all the products. So where other products like conventional are going to make you wait 4 years, USDA is 3 years. Those products are going to make you have a longer time. FHA is 2 years from discharge date, being able to qualify for a mortgage again.
And that is so huge because there's so many people that think that they have to wait and do not know, and they could have been in a home for.
Oh, I tell a lot of them, if you
Yes.
did claim a Chapter 7 bankruptcy, don't wait to apply for a mortgage until you hit the 2 years. Apply a year in advance. Let us help you get there, right? It's not 75% of clients don't qualify, as soon as they apply. When I say, 75%, a lot of them, it's just, some adjustments like their lease is ending or something, something that's very minor. But but at the end of the day, everyone has to prep, and you have to prep somewhere to a certain extent. Not everybody's ready because you just don't know. You don't know what you need to get ready. So I always say, even if you're in a Chapter 7 bankruptcy, you just finished it a year ago, go ahead and apply, have your credit pulled. Let's figure out where we're sitting at, and put us in a position to where when we discharge in 2 years, or when it becomes 2 years from discharge date, you're ready then, and you're not scrambling, or you don't push it out any longer than you need it to be. Let me put it that way.
Exactly. You could help them with, or at least talk to them about secured credit loans, secured credit cards,
Oh yeah.
all of those things so they build their credit score.
And then you said you had another question.
Yes,
An
streamlining.
an FHA IRRL.
So I talked to a lot of clients about this. So I think FHA gets it's like a bad rap in general in the market because of the house has to be in a certain condition a lot for listing agents. But they're a great product right now as interest rates are declining. Okay. And I talked to clients a lot about it, is even if the market crashed right tomorrow, there's something called an FHA streamline. There's no appraisal done. Okay. And there's no income verified on it. So even if you lost your job, you'd still be able to refinance your home on an FHA home loan. It just has to be more than a 0.5% drop. There has to be a net tangible benefit to benefit you. So you can't refinance and drop it at 0.25%. It's got to be more than 0.5%. But in a market like this, where we're projected to drop almost 1% in the next 12 months, a streamline is really, really, really powerful for people because it costs less money. It's a much faster process. It's like a 7-day process in total, 7 or 8 days, a lot of times. And you just drop that rate. You drop it, and then you redo your loan essentially. But I love the product because it's something that we're talking about with clients a lot, because a lot of them are very anxious about what current interest rates are doing right now. But if you looked at what interest rates done in the last 3 months, we've almost dropped 1% in the last 3 months. And it's continued to go over the next year. And really where this comes from, or it derives from, is that during COVID, we printed a bunch of money off and inflation went crazy. And how we fix inflation is by raising interest rates. It's the 10-year bond. The 10-year bond is adjusted to pull money back out of the market. And so we've kind of fixed that, right? It's the US government. They've announced 6 times they're going to cut the interest rates this year. Do I think that they're actually going to do it? No, I think they're probably going to do it 3 times. But they're going to drop, right? Well, at least every analyst, and as long as it's history repeats itself, which it usually does, it is an election year. Biden's going to want to look very good going into this election, and interest rates are falling. So I'm hoping to see us in the 5s by November. But that product, I'm talking about every client. I'm talking to them about a streamline when they're purchasing. Is I don't want them to buy down points for a lower interest rate because it would be money wasted. We
Yep.
might as well buy the points when we refinance in, 6, 7, 8, 10 months, whatever it is.
Totally
For
agree.
those curious, IRRL, IRRL, interest rate reduction refinance loan. It's just a long acronym, but it just means you get a lower rate.
Yeah.
We're reducing the rate.
Mhm.
And you can do that on VA too, can't you?
Yeah. Those are the only 2 products that you can do it on.
210 days. Maybe you already mentioned that, Jordan. Sorry.
6 payments or 210 days. 6 payments or 210 days.
Yep.
You can do a IRRL. They're usually, a lot of banks have pricing incentives for those products too right now too. So they're actually better pricing than a regular purchase mortgage, right? So there's times where I'm trying to tell people, hold out a little bit, let's let it get closer to November, but there are people already that are starting to refinance from not even 3 months ago, 3-4 months ago. So
That's tremendous. And not all banks can do that too. So that's the nice part about a broker with you. They can't churn their book, if you will. But you folks as brokers can do that, and you can do it all over the United States. So wherever you are that you're watching this, if you have an FHA loan or you want to get an FHA loan across the country, they're licensed. And what states aren't you licensed? So it's like 2, isn't it?
Yeah, as a brokerage, we're not licensed in 2, New York and Massachusetts.
Yep.
Us personally, we're licensed in about 22. So, but it doesn't mean we can't help you. We can refer you to someone local. So some states have distance requirements.
Totally. Okay. Well, good. Well, you guys are certainly very knowledgeable. And we just talked about FHA, but you also do investment loans. You do the DSCR. You do conventional. You're, as a broker, a resource for any type of loan on any type of residential. Do you do any type of commercial, or is it all residential and everything?
We do commercial as well.
You do commercial too.
And business loans.
Oh, really? Okay. I wasn't aware of that. That's fantastic.
Yeah, it's not, we do those more of a referral, right? We do those on a more of a referral basis, but it is someone that's wanting to, get equipment financing or stuff like that we can help with. But our wheelhouse and what Josh and I focus on is residential and commercial real estate more than anything, right? So I would say that 99.9% of our time is dedicated to that and the home ownership. So
awesome. Well, that's great. Is there anything else that you folks would like to share today with us?
I don't think so, other than we'd love the opportunity to help if you've been turned down in the past, or maybe been misled, or maybe just a little scared by the whole process. We'd love the opportunity to see if we can help and find the best fit for you, find the best, whether it's down payment assistance or
whether it's just putting you on a plan, right? Getting your credit
exactly.
right. Doesn't matter what it
Absolutely.
is. So it just is 90% of the battle is prepping for it. So that's what I try to tell people when it comes to mortgages. You just gotta get in there and get someone that's willing to give you the steps.
Exactly. Well, that's great. Well, I appreciate you guys coming on the channel today. Anybody watching, I can vouch for these guys. They're great. They have a great reputation, and they would love to help. So reach out to them. Their information will be in the contact below. And they would love to talk to you. It's free, to have that conversation. Maybe you want a second opinion, and to make sure you're on the right path. Maybe they've got better rate for you, a better program. Because as a broker, they're able to bring things that maybe captive lenders sometimes can't. So with that, I want to thank you guys for coming today, and looking forward to speaking with you again.
Thanks for having us, John.
Yeah,
appreciate you.
it.